Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, August 8th, 2023. In this video, I'm going to start out with, and may just stick with the equity markets, kind of break it down to maybe some smaller videos. So time permitting, I'll hit on some other things. Otherwise, I'll cover them in another update. But those include things like natural gas continues to look constructive, up again today. Crude oil up again today. And again, that's a big one for the inflation numbers. And then treasury bonds, keep an eye on those yields. Again, I'll try to update those later. So those are the kind of ancillary trades or additional trades, asset allocation, things where there's trading opportunities. In the stock market, I continue to favor being short tech, primarily the semis, some individual sectors such as restaurant and leisure stocks, financials. I'm really warming up to that. Regional banks, again, might have to get to that in another video, but looking like I'm gonna add some additional sector trade ideas here soon, including the some of the big financials. Let's start out with the markets again and stick there right now. This is the NQ, the same chart I've been sharing now for several weeks. I was zoomed out to this 2-hour candlestick, meaning 120-minute candles, 6 months of price history. And the story of that is we've been building these divergences. And, divergent high 1 had a correction 1, made a marginal new, but still divergent high, just an extension of that existing divergence. And, after several little divergent lows and rallies and tests of the trend line, we finally had a clear and unmistakable sell signal there. So now here's where we're at today. So let me talk on this because there is a potentially strong bullish setup. Now, the way this works is a bullish setup, any bullish technical pattern, any chart pattern, is just a setup until it triggers an entry. And so right now, the near-term trend, if you just look at it from here, this point right here, that's mid-June or so, the near-term trend is bearish, very near-term. Again, we're making lower lows and lower highs right now. But you do have this setup, and this is what I wanted to point out. It started pointing out the divergences yesterday. We had divergences. Those divergences are still very much there, and they're still showing through. They're even bigger on this 60-minute or this is a 120. They'll also show on the 60-minute charts of SPY, QQQ, NQ, and ES. And so you have a pretty clear downtrend line. This gives us right here a bullish falling wedge, and that is a inherently bullish pattern. Breakout above the wedge would most likely send us up here, and potentially for that backtest scenario I've been talking about. It still remains my alternative scenario. Bottom line is, to just summarize it here, there's big resistance here. Remember that 15,533-ish level? It's more of a resistance zone. I'm going to block it in here with this big line, and that's where we're at now. Here, I'll zoom in for you, and we'll take a close look at that. So again, you can see all this point here. I'll use this yellow tool. I have two lines running from about 1540, 450 up to about 15,533, and that's our resistance zone. Plus, you have the downtrend line here. So now the way this works is, a bullish chart pattern is just that. It's a technical setup. There was certainly a active trade to be made today off the lows. It was an active trader. I told you I tend to game the zigs and zags. So we hit this support level again. This was given to you in advance. 15,254 right there. And so far we've had a little reflexive bounce off there. Nothing much. Again, potential divergence. But what I'm looking at here is, remember, we're coming off a much larger divergent high. We're coming fresh off that sell signal trendline break. All that together tells me that the odds favor this bullish chart pattern will either not pan out at all, in other words, no breakout, nothing more than maybe just another bounce up to the downtrend line, and then prices continuing to move down to my downside targets here. And then these divergences just get taken out or negated by taking out those previous lows that they have there. Okay, so that would be the most bearish scenario. And again, when I do this, remember, there's a myriad of possibilities. There's a lot of different scenarios, but I would still put preferred odds on that. And again, the stopping point is right about here. This would be anything much above there, because if you break the trend line, you still have a significant price resistance just above. So anything much above that 15,533 would be a breakout, and then increase the odds that you are going to see that some more upside and these 60-minute divergences play out. And you could see a rally all the way up there to back test. There's some price resistance right there as well on NQ, and then you're in spitting distance of that recent high. Remember, that's not the multi-year high. This is so far what could, and I'm still viewing as a likely bear market rally end of the bear market rally high right there. You got to go back farther. And the Nasdaq is still below its November 2021 peak. So this is it. Again, preferred scenario would be the dead horse. I've gotten these scenarios out to you every day, but this one is very much a possibility. And so what do you do with that? You if you're an active, nimble trader, you can adjust and take the breakout and set a stop a little below and try to ride it up. If you are a bull, if you're here to just get analysis, and then you like to get analysis from here, maybe some other sources, and then at the end of the day, you process it all, take it in, and then you make your own decisions on what to do, which as you should be. You're bullish right now. Well, I've identified this level in advance. We hit it today. We have positive divergence. You go hard long there with a stop somewhat below today's lows, and you hold out for that scenario. Maybe even new highs beyond that high. Maybe even new highs beyond the November 2021 high. Again, if that's where you think the market's going. So what I'm doing here is pointing out developments. I'm pointing out key support and resistance levels, potential bullish and bearish patterns and developments, and in this case, that positive divergence. So that's that. And as always, not to be confused with someone that's saying, well, the market can go up, the market can go down, and then jumping on whichever scenario is the right one. This is still and has been my preferred scenario, that any bounce is going to be limited. Remember, my alternative, which is still a longer or intermediate term bearish scenario, was a back test of the trend line. Now we're getting pretty far away from there. So when you were here yesterday, it wouldn't have been as far to go up. Now you have a higher run right there to go up to back test it. And again, we're holding support. Let me make that clear. Let me jump down to a few other time frames for you, and then we're going to keep this one limited to the equity market, so I'll get kind of deep into these charts. Here's a 15-minute chart of NQ, and you have a downtrend line right there. You have pretty good price resistance right here, where I think it's an objective level. In fact, I just had an order filled. I don't know if you saw a little pop up in the corner, fired off some NQs that I'd taken today at the lows on that other support, and I'm going to reverse, try to game a little pullback, and then maybe trail it on up here to see if we can get another leg up to hit that downtrend line right there. And then again, this is a 15-minute chart, and that wedge shows very clearly here. So if you're zooming down on this time frame, there you have a nice bullish falling wedge. This is your divergence line. There's your downtrend line, and so break out of the wedge. But what I did for you on this chart here is I thickened up the lines. This one here is the most significant resistance level I see, about 15,509 it shows. That's the same level I was talking about on the 120-minute chart. Remember, we're just zooming down here a little shorter term time frame. So these are the levels to watch. We're downtrend line, divergence lines, and then resistance right here. Again, just reverse. So some longs off the lows today. Came into the day short, covered those there. Took the bounce because we hit that target on the 120-minute chart I had laid out before, and then get a little pullback here. And at that point, I'll tell you what, we're getting close to the end of the day. I'll maybe loop back in the end of the video, or what I'll do is get this video out now, and I'll put a chart or some comments after I post this video and let you know my thoughts. I'm kind of keeping options open. I may even go flat for the day here if I can get a little pullback trade reversal off this 15,337 we're at right now. Okay, do make a couple trades there. Shut it down for a second. Paused it. Picking back up. Okay, we're still at the same level. There's a downtrend line right there. I'm just scaling back into, wanted to add a little bit more. I only reversed in, closed out the longs and just reversed into a very small starter short for a pullback trade, and wanted to add to that. And earlier today closed out VIX futures. I'm going to get to that for you too, because some of you might be trading the VIX. I've shared that as a trade idea recently, and I'm scaling back in. I took just a partial position back just now, and I'll show you why. Again, well, the why is, again, this could be the stopping point. I'd put it probably 50-50 odds, whether this right here, 15,337, before we get a decent pullback, or the downtrend line, because the downtrend line, you can see I have a minor resistance level, 15,400 right there. And then, again, if we break out, you have pretty big, very significant resistance there, about 15,509, which I would be closing out any longs if I am long up to that point, and most likely doing at least a quick pullback trade on the short side. So this is kind of getting nitty gritty down in the charts more so than I usually do, because again, I'm going to keep this one to the equity markets. QQQ, 5-minute chart. This is the same. I was just on a 15-minute of NQ, but here it is on a 5-minute. There's your bullish falling wedge right there. This chart I share quite often in the videos, especially as of late, because the markets have been kind of topping out and going mostly sideways. It's been a down to, but overall mostly sideways trading range for the last month and a half now, 2 months, with the big tech stocks peaking out, just running out of gas. And so that's when I put on my active trading hat mode, day trading, short-term swing tradings, and this is just a great time frame to trade off of. I've shared it many times. All these levels here: divergent high, go short, divergent low, long, divergent low, short, divergent high, one little correction on that trend line break, put in a bigger divergent high, correction, divergent low, divergent high, divergent low, divergent high, and here we are. We've come full circle. So I take this little thing here, duplicated DL, that's a divergent low, and there's your bullish falling wedge. But remember, you can't get too cute or too comfortable trading these bullish setups now, because we are in the early makings again of a near-term downtrend. But much more importantly, we've just broken down on this much more significant 60-minute time frame. Therefore, where I'm going is that those long side bounce trades, we're seeing it already. They're getting sold into earlier and earlier. In other words, what we're starting to see, the dip buyers not coming in with as much vigor as they were for months now. You can see things kind of slow rolling here, and I'm going to get to the long-term charts in a second. So therefore, that's it. So I'm pointing out what is, and again, in a vacuum, if all I had to trade were 5-minute charts and I couldn't see the dailies, the 60s, the weeklies, then I'd be probably, I could almost assure you I'd be positioning pretty heavy now, and then waiting for a breakout of that 5 to 15-minute or even 60-minute bullish falling wedge to go long, add to some long positions, and try to go for a much larger trade. But as I mentioned, at this point in time, there's a good chance this may just be a bull trap. Nice looking setup, especially if we break out, get the bulls all charged up, dip buyers charge up, and then boom, if we rally into, there's that comparable big resistance. I showed it to you on NQ a minute ago, that one that I said was more significant. On QQQ, it's about 375.40. So that would be a false breakout, and then most likely be followed by pretty swift selling to the downside. And then again, this is still my alternative scenario, and it's just it still has us going to the same place if you're a swing trader, longer term, typical swing or trend trader. But again, anything much more than that, and then I'm just wrong on that. And I'll be positioned accordingly. I'm not going to ride shorts up here, but this is a big level. If the market takes back this downtrend line right here, that yellow downtrend line, and the primary uptrend line, this is what I've been saying for a while here. I was saying short here when you broke down, short there on the back test with a stop right there, very objective. Now you're already profitable on that. So if you want, you can lower stops to wherever you want to let it run and protect profits. So, all right, so I made it clear where I think we're going: primary, alternative, and then just, that's a possibility. And, if you are bullish, trade it as such. What do I mean by that? Well, first of all, take this divergent low, take it at support. Remember, I, showed you on the 120-minute chart that I started with, we hit that support level slash initial target that I had. So that was your objective long. Your second buy point would be on a breakout of the downtrend line, the wedge. Third buy point or objective long entry on a break above 375.40, and then a break of the trend line, especially a recovery of both of the intersecting up and down trend lines. And you have a whole little area of trading range right there, which comes in as well. So there's a whole confluence of massive resistance right there, which again, if they break out, that's going to be bullish and will most likely take out that previous high. So there's the, certainly a possibility and a somewhat probable scenario. And the probability to me is a lot lower. That's why that would be if I had a third scenario, that's what it looks like. But, primary, alternative, and then, or tertiary scenario, whatever you want to call it. All right, let's go to ES, the S&P 500, very significant index. I'm starting to, as I said in the beginning of the video, looking for some other key sectors such as financials, including the regionals as well, to start providing. A lot of them are looking like attractive shorts now. This is our primary uptrend line. Again, covered quite a bit lately. We had this little minor uptrend line right here, forming with the divergence line, forming that bearish rising wedge. That was sell signal number 1, sell signal number 2, and a big one in my book at 45.58. Horizontal support right there, plus intersecting trendline resistance. Doesn't get much better than that. If you missed it or second guessed it, they gave you a beautiful opportunity right there on the back test of the 48.58 level, and that's also set up this downtrend line right now. So this looks, we're going to zoom in a little bit here. Again, this was a 3-month hourly chart, so 60-minute candles. So we did put in, and we're coming off that divergent high. We've been stair-stepping lower since. There's your near-term downtrend. But you do have, again, I would be remiss not to point this out. We have positive divergence. It's been building. I've been pointing that out since yesterday. We had very good support here, about 4,500. We slightly undercut it, but reversed. And the fact that we've reversed and are back above it now, that makes this a whipsaw. And that's a pretty bullish thing right there, because what happens is shorts that might see the charts different from me, similar but different. I see the divergence. I saw the NQs hit support at the very same time when ES bottomed, and that's where I made a case to reverse. And I'm going to put a line here for you. Now that we have a reaction low there, plus we had a couple other reactions right here, that was support along there, reaction right there. So now that's the level that needs to get taken out, 44.80 right there, give or take. And so this, just like NQ, gives us a nice clean downtrend line with plenty of reactions, right? And positive divergence right there. You have at least equal, if not higher, lows in the indicators right there. Definitely higher lows in the PPO. And so there's your potential bullish setup. So buy signal number 1 is a break of the trend line from here. And then that would be a minimum target, 45.58. So far, it's been offering objective short entries. And hard to spin it as anything bullish if ES can clearly take that level out. But one of the bearish scenarios would be a breakout of that level, followed by a whether the breakout carries all the way to 45.58 or not, followed by a rejection that takes out the recent lows, especially if it takes out the divergences, which it probably would if it happens soon. So these are the things I'm watching. And again, 5-minute charts right now, constructive. Let's see if I have anything. I didn't mark up the SPY 5-minute, but there's the SPY 60-minute chart. There's that positive divergence. You can see we had support right here on SPY. There's your 60-minute divergence, but we're coming off a much larger divergent high on the 60-minute chart there. And you also have a trend line on SPY right here, potential trend line. Only have a couple reactions, but there's one to watch. So this right here, about today's lows, maybe a little bit low, about 444. You have uptrend line support and price support. No bueno for SPY, probably going to take the S&P quite a bit lower if that breaks. Then I have a longer term trend line that may come into play right here. And that's where I think we would go if we reverse soon. So there's a really nice support about 418 plus uptrend line resistance. and that would be a target if this whole thing craps out and these divergences don't end up playing out for a tradable rally. When I say playing out, they're 60-minute divergences. Usually you're going to play out for a rally measured at least 6, 7, 8%, if not double digits, on a 60-minute divergent low. And again, if they don't, then that's quite bearish. When I see a textbook bullish setup that fails to materialize, that's pretty darn bearish. Let's react. I gave you the levels to watch. You don't have to bet it hard. Bet it any way you want. I'm just showing you the levels that will start to change things near term and longer term. So that's the 60-minute chart. Here's a 15-minute chart of SPY. Again, I like to toggle between all these time frames because sometimes you pick up some little nuances or levels you don't see elsewhere. Beautiful little bearish rising wedge. Again, breakdown, impulsive, everything you want to see. That's just one for the textbooks there. Give you objective short entry. You also took out price support right there. That was the back test of it. And we're moving lower. This is at 15-minute on this chart, 15-minute positive divergence. So again, the onus is in the bulls' court right now. The bulls should take the baton here and run. All they need to do is pop that level there. Yeah, you have a reaction high, and that could send us up quite a bit higher, maybe a back test of this trend line. And again, remember, trend lines are dynamic, means their price points come in on an uptrend line at a higher and higher level every day. So back test of that trend line, you wouldn't want to ride out a short position in that because it could take us a couple weeks to get there, and it could be 4 or 5%. So pointing it out because if you look at the measured target of the wedge, which is the widest point of the wedge added to where the wedge breaks out, that alone would get you right there to that gap. There's a big old gap. And again, 60-minute chart in a larger, 60-minute divergent low in a larger uptrend. I'm talking the uptrend really off the October lows. Certainly has the potential to carry the market to new all-time highs. So respect it, react. If you take it long and then the breakout fails, well, don't be married to that because that's going to be quite bearish. Likewise, if you are short and break out, these are all objective stop points. If you want to have some tight stops a little bit above the trend line, I like to give it a little bit of room, at least a 60-minute candlestick close usually to avoid whipsaws. Same thing over that 450, 150-ish level. And again, at the end of the day, which you hear me say often, I watch NQ, ES, SPY, QQQ, because those are large caps. They have no relation to IWM or RTY. If I'm trading the small caps, I'll watch those too, IWM and RTY. But on these, I'll watch them all, and I'll watch these multiple time frames, especially in this market right now. It's, active trading is like swing or trend trading with the fast forward button on. You're just catching these little rips and dips. You're getting 1, 2, 3%. And you're getting it over a couple days, and so you're in, out, in, out, in, out. That's what I refer to as active swing trading. And that's what this market has been conducive to now for the last month or so. The trend trade was right here. The bulk of this move off the lows earlier in the year. That's a 15-minute chart. Got to go back farther, and more so in the Nasdaq 100. Okay, let's look at a couple, something else related to the market, the old VIX volatility index. A couple weeks ago, I started pointing out this bullish falling wedge pattern right here, complete with positive divergence. I highlighted that we did break out. After I highlighted it, we were still in the wedge. Then I highlighted the breakout right here this day. It broke out, capped up on Tuesday, and these are the same targets. So we hit that 1724 target. And that was at the same time, at today's lows on NQ and ES, that's when we hit that target I had laid out initially on the 120-minute chart right here of 15,254. So with the positive divergence on the 5-minute, 15-minute, 60-minute, 120-minute. So that's where, again, I mentioned, taking some profits on the VIX futures. So there they this is it right here. These are the contracts I'm trading August 16th. And beautiful resistance level right and when the market hit that support today at the lows. So that's what I had mentioned before I closed out the all the the whole position because that's really good resistance, nice target. It's been a nice run. There was this bullish falling wedge here. I believe this I already pointed out back a couple of months or so ago. Breakout, perfect back test, textbook. First resistance level was that, or target was there, that 1613. Hit that. It was beautiful resistance. Rallied up, hit the next target, and then it's been a pretty good pullback. And so I started scaling back in when I paused the video earlier, and I'll add down to that level. But anything much below there is probably going to coincide with a breakout. If we break out in SPY, ES, NQ above those wedges and those other overhead resistance levels, we'd probably drop there. Again, I don't favor that, so I think we're going to go up, and I'd rather not get greedy and hold out for a pullback all the way down to 1612 or 1613 down there. We may get there, but we may do that. And starting to form a little uptrend line here as well off the lows. So there's something else to watch. So somewhere in here is my preferred scenario. And I gave you, in addition to the VIX itself, that's the spot VIX index. You can see it moving up nicely lately. I gave you VXX for those of you that don't trade futures. It's one of many ETNs out there. And on this one, I gave you the same thing, bullish falling wedge pattern on the 60-minute chart. Positive divergence right there that by no mere coincidence that coincided with the negative divergence on the indexes. We put in divergent highs. The VIX is almost a mirror and reverse of the stock market, especially the S&P. And breakout, back test, and it's stair-stepping higher. It's not rocketing yet, but since the breakout, it's, you know, rallied about 12% so far. And you can see I have a little bit higher target, but I always say, remember, trade, keep an eye, even if you're not going to trade the futures, this ETF, all these VIX tracking ETNs are rolling, they're tracking the futures, and they don't do a perfect job. They have expenses and fees. So when you're trading the VIX, you want to always trade it with one eye on the indexes, particularly the S&P 500, but also the Nasdaq, because the VIX itself, they're tracking, you know, S&P 500 volatility index. And again, so there it is. So there's support. We may or may not get back all the way down there. If we do, that'll probably coincide with a rally of the SPY and ES and NQ into those downtrend lines I just gave you on the 5 to 15, even 60-minute charts. And then another leg up. And then if we break the recent lows, today's lows, we'll probably go ahead and shoot on up to these additional targets here in VXX and maybe all the way up here. Okay, all right, keeping with my promise, let's keep this video short. We'll wrap it here because I just covered the markets, particularly the large caps that I'm focused on now. I'm starting to eye the small caps as well. Regional banks, they have a big impact. KRE, the regional banking sector, ETF. The IWM's chock full of the components of the regional banks. They really have been moving it lately. So to be long or bullish the regional stocks, or short and bearish is also to be, you know, the same on the small cap index. So right now, this is my focus. I want to get the video out to you. And so just watch these levels and trade them. You know, if you're an active trader, this is the realm you want to be in. 15 5-minute charts and etc. And you can see here, I had on the futures when I started the video, the recent reaction. I'm just adding this line right now because that catches right there. And this is where I told you I reversed back, right? Those two reaction lows on NQ on this. There it is, 337. You can see those two reaction lows. Plus, you have this one here. See, this is why I like to use both charts. You have a perfect three nice distinct reactions there on the 15-minute chart of NQ. But when you go to QQQ, this one was a little higher because remember, NQ is showing you those round-the-clock trades. QQQ, you're looking at trades that occurred, you know, in the Nasdaq 100 from 9:30 a.m. to 4 o'clock p.m. So you're sometimes going to miss those certain reaction points. But there it is. Okay, I'm going to wrap it up here, get the video out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.